Hello, traders. It's 8:02 a.m. Chicago time on the 26th of February, 2019. Thanks for joining me on this Tuesday. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market is off risk this morning. The Dow is down 129 points, or about 0.5%, followed by the Nasdaq and the S&P. The European markets are also down. The leader this morning is the British pound popping higher 0.57% or 75 bips. Um, the um, the not bips but pips. The Treasury bond is up 20 ticks. The 10-year note is up 10 and a half ticks this morning. Depending on how you look at it, could be 10 and a half, could be 21 ticks, depending on what you measure as a tick. Different people talk about that futures contract differently. Anyway, so clearly risk off. We're back inside of Friday's range. Yesterday was really a neutral, extreme down day in the S&P and across several indices. Looking at what is likely driving us forward, um, I see a drop last night from the point where the announcement, the news came around that India had attacked a camp over the line of control into Pakistani Kashmir, a very long-term dispute there. And apparently, the Indians are saying that they had destroyed this camp, and the Pakistanis say nothing really happened. So who knows? But in any case, these are two nuclear armed countries that are making an aggressive. There's aggression between them, and the market responded by going to safety. That news came out at about 8:10 Eastern or so, 8:15 Eastern last night, and we saw the market drop from about 27.94 to about 27.86 and has kind of crawled its way back up so far. So that's the big news. Also, Fed's Powell comes on today and testifies before Congress, and that's of course very big for the market. In the overnight, the big release was the GfK consumer confidence out of Germany came in perfectly in line at 10.8. Consumer confidence in France came in stronger, 95 versus 92. And in the US, released strong building permits, 0.3 versus expected negative 2.8. The prior's 4.5. Housing starts came in much, much worse, negative 11.2 versus negative 0.5. They were way off. So that's the percentage in terms of units, 1.078 million versus 1.25. So not looking so hot there. Case Shiller was just released a few minutes ago. That came in worse than the prior as well, negative zero point 0.2 versus negative zero point 0.1. So those are the releases that have occurred at 10 Eastern. We get consumer confidence expecting 124.7. This is a medium tier release. And of course, at the same time, as I said, Fed Powell's um, Fed Powell's testimony starts at 10 Eastern, a half hour after the market opens. Beyond that, there's some Parliament action on Brexit. Prime Minister May is still continuing to try to convince some members to accept her plan. Otherwise, she'll have to delay it, I believe, to March 21st or something like that. But that's just a continuing bureaucratic mess. But that's not relevant to us today. So let's move on to our review segment. I'm going to try to make this as short as possible. Yesterday, we opened in a gap up on the China deal, being almost completely written out or being finalized. and the market was expected to test higher and then pull back, leave a gap behind, and hold steady in the middle. That was the primary scenario. The secondary is it's was expected to creep lower and then start impulse up and then start to push higher into 28.15. And then the third scenario, which I said would be the better opportunity, is to test higher and then turn down and then start to move towards the prior day's range. The high is 27.94.50 from the prior session. That was last Friday. What the market gave us is almost exactly scenario three. Here's scenario three: push up, open, push up, and then just move down. The way it was done, though, made it really hard to see coming. The pullbacks, we had a quite a bit of noise here. We breached the IB low early on, and then we turned around and took the IB high, went to 28.14. Remember, 28.15 was the expected initial resistance. I had a stock zone there. And then we made the day neutral. So we have a neutral day at this point. Both sides extended the first hour's range. And then it pushes right through the mid and it extends down and has a hard time pulling back. So right at the IB, we have this very clean and clear low volume node. The area is around 2805. Remember, 2806.50 was the excess high left behind from sometime in December. And the pullbacks were fairly shallow, but the first opportunity I saw to do anything was in this area here, multiple tops, and then release to the downside. And overall, we ended up leaving a gap open of about 2 ticks. We stopped at 27.95. The prior high is 27.94.50. 2 ticks. I didn't mark that on the chart as a gap. It's just 2 ticks. So with that, as it's flowing down, we see that the delta is finished pretty much uh, flat. And so it's you can see the delta here. Here's the delta. Let me blow this up a little bit for clarity. Let's go to 50%. So you can see the delta. These are, let me hide this for a second. So VB delta momentum. Let's hide that. Okay, so now you can see the delta here. The delta was fairly strong in the morning as we chopped around in an open auction out of range, fairly strong. And then as soon as we pushed to that 28.14, it started weakening, and then it held we held these prices sideways. Remember, the delta zero line corresponds with the open. As we held zero line, the delta crept up, and then we sold off. It sold off, and it came right back to zero right at the close. As price was near Friday's high, the delta was really at zero, which is kind of odd. Honestly, this is the kind of behavior that has preceded breaks. It's kind of like the calm before the storm type of situation. Let me turn the momentum back on. Don't want to forget that. It's almost like the calm before the storm. I mean, it's doing a good job of gaining new territory on these news events. We've left a couple of gaps behind, but it seems to be working harder to maintain higher prices. And so overall, it's I find that it's a tougher read. There's a two-way auction going on, and yesterday finished up with what was a reversion back. So here's the here's the overall picture. This is RTH only. This is, the full session, the day session only, the pit session only, and clearly we're in a very oops. Clearly we're in an uptrend here. Um, we're in a channel that's moving upwards. Yesterday opened and finished kind of bullish. Did not leave yesterday. Did not leave a an excess above. They had traded quite a bit right up here near the highs. So that was again suspect. I like the mid pullback. The mid was against the point of control, unfortunately, but the mid VWAP point of control in the same area, it looked good to me. It was good for one scale and then basically a scratch, and that was it. So the buy side, in my opinion, just struggles. In the overnight session, on the reopen, we basically start to go sideways until we get that Kashmiri news. I'll show you that on Bookmap, on the heat map. That was back here. Just a quick drop, and then since then we've walked ourselves back up. Now the market was at about 27.94, or almost a Friday's high, and we've walked ourselves almost back up there. So overall, very uneventful overnight session. There's not much to say there other than the fact that it sold off a little bit and the delta is lower and so on, but really not much there to talk about. The volume is not anything that's outstanding. It's still, it's elevated, but overall the profile is extremely Gaussian or extremely balanced from a statistical perspective. Just looking at balanced distributions with the mode being in the center, you could see here that the point of control, mid, VWAP, all on top of each other. Completely balanced overnight session. The distribution up and down are generally the same. The market has nothing to price in. It's done a good job of finding consensus right here at 2790, just below the century figure. So not much we can glean there from the overnight session. What am I looking for today? Today, really, I expect the market to be quite lazy until the Powell comments. And I'm not sure if the Powell comments are going to be treated almost like an FOMC minutes type release. But I do expect the reaction as the testimony goes on. I expect a pretty jarred kind of behavior today in terms of the market responding to what's being said. So not really um, you know um, going to be aggressive today. The primary expectation, open auction out of range. I expect the market to respond, to be responsive back up into this 27.95, potentially push the overnight high, and it could push as high as 2800 and a half or so up here, 28 and a half or so. But overall, I expect it to sit tight in this range and potentially just form a balance with last Friday. Let me clear my throat. Not expecting much more than that. That's the primary scenario. The secondary scenario, uh, the you know, given Clarita's comments, Fed's Clarita's comments yesterday and others, the Fed does not feel like it needs to be in a hurry to raise rates. They see inflation as being muted, so there's not much that they can offer in terms of intervention. So in that sense, I expect us to potentially drift down, test up, and then test the range, and then hold sideways on scenario two. Again, all of that pending whatever happens with Powell today. So who knows what is said and how that could be perceived. But overall, I'm expecting a responsive push into yesterday's range as a primary idea, and then I'm expecting an attempt higher and holding the range on the secondary. I'm willing to sell. Uh, I don't want to sell the 2800, but I'm willing to sell into the 2800. I'm also willing to sell into 2805.06. This area, let me switch colors back because that would be under scenario one. I'm willing to sell this area right here on a retest, on the first test. That's the big idea for today. Um, and so, any push into the prior range helps me get a trade off in an area where I can define risk pretty well using yesterday's action. So Powell speaks a half hour after the open at 10 Eastern, 9 Central, 3 p.m. UTC, and that's where we go from here. Anyway, I hope that's something you can benefit from. Good luck today, and I'll catch you tomorrow. Take care.